Hey everyone, welcome back to Corporate Decoder, the place where we decode the secret language of corporate filings. Today we're diving into Lithium Corporation's latest 10Q report, and trust me, it's less about electric cars and more about a financial roller coaster. Are they mining for profits or just digging themselves deeper? Let's find out, Civ. If you find value in getting straight insights from corporate documents, make sure you're subscribed and don't forget to join our Discord community in the description below for more in-depth discussions. Lithium Corporation, formerly Utalk Communications, is in the business of trying to acquire and develop lithium interests in Nevada and battery or tech metals prospects in British Columbia. Right now, they are in the exploration stage, meaning they are looking for possible places to mine. Keep that in mind as we dig into this report. This is their report for the first 3 months of 2025, so January, February, and March. It's like a snapshot of the company's health at that time. The report is prepared following what's called GAAP, or Generally Accepted Accounting Principles, so we can be sure it's somewhat standardized in theory. Let's get straight to the good stuff, the numbers. First, we need to fund balance sheets. At the end of March 2025, Lithium Corporation had about $3 million in current assets. That includes cash and some marketable securities. Not bad. Now let's check the liabilities. They owe about $2.4 million current liabilities. A lot of that is an allowance for optioned properties, meaning cash that has been received related to properties that have been optioned to other companies. So their total equity, or what's left over if they sold all their assets and paid off their debts, is around 6, means their equity decreased in the last 3 months. Now to the income statement, where we see how much money the company made and lost, sadly. Lithium Corporation recorded zero, yes, you heard it right, $0 in revenue for the first 3 months of 2025. That's the same as last year. And then comes the operating expenses, or the money the company spends. All totaled, it cost them around $158,000 from last year, so that is good news. They are losing less money this year. However, subtracting expenses, Lithium Corporation has a loss from operations of about $58,000 from last year. So that is good news, they are losing less money this year. The company also took a hit from their marketable securities, losing about $80,000 from those investments, which is why their total net loss ended up being about $220.25 or $0.00 per share. That's compared to about $30.23 per share for the same period last year. So overall, they are making some progress at slowing down the bleeding, but are not profitable. The last big financial statement is the cash flow statement, which shows how much cash is coming in and going out. For operating activities, the company used about $139,000. For investing and financing, there were no cash flows. At the end of the period, the company had about $2.9 million in cash. Again, this is less cash than they had at the beginning of the year. Now let's shift gears from the numbers to the fine print. This section goes over the rules and methods the company uses to calculate and report their financial information. It covers how they handle cash, write off mineral properties, how to account for option properties, and how they account for income taxes. It can get boring pretty fast, but it's important to know this stuff. Here's a scary part. The auditors note that there is substantial doubt about its ability to continue as a going concern. This means there is a real risk that the company could run out of money and fail. This is based on the fact that the company is losing money. About $139,000 used in operations for the first 3 months of 2025. Lithium Corporation needs to find additional funding or something has to change. The company owns marketable securities, which are basically investments in other companies' stock, and in this case, those investments are available for sale. At the end of the period in March, they were worth about $117,000. They got these shares then at the end of last year when they were worth about $217,000. This change in fair value caused the company to lose money on these investments. They got these shares in exchange for optioning their Fish Lake property and North Big Smoky property to another company. This section talks about stock options, which are basically promises to give employees or consultants stock in the future and allows them to purchase the stock at a specific price. The company granted 3.7 million stock options a few years back. Because the price of the company's stock has fallen so much, they have repriced those options, meaning lowering the price to be closer to what the actual stock price is. The options are exercisable at 0.4 sets at the end of March 2025. The company has 4.1 million options out there. This part tells us about the different places Lithium Corporation is exploring. The most important ones are the Fish Lake Valley property and the North Big Smoky property. They have deals with other companies to explore these properties, but Lithium Corp still owns a big chunk of them. This section talks about the Fish Lake Valley and North Big Smoky properties in more detail. Remember those deals where they gave other companies the option to explore? Well, Lithium Corp has recorded the money they got from those deals as a liability, not revenue, until the other companies actually meet all the requirements of the deals. This is a conservative approach to make sure they don't overstate their earnings. Here's a place to watch carefully. A related party is someone who is closely connected to the company, like an executive or a major shareholder. Lithium Corporation paid almost $10 2025. Also, a related party rents office space to the company. As of the end of March, the company owed about $33,000 to related parties. These related party transactions must be watched closely since they can be opportunities for abuse. Lithium Corporation basically has one business exploring for minerals, so they don't have different segments to report. All of their money comes from or goes to that one activity. Here they break down their revenue, expenses, and losses for just that segment. It's basically a simpler version of the income statement we already looked at. This section talks about any important events that happened after the end of the quarter, but before the report was filed. Lithium Corporation says there were no important subsequent events. Alright, that's our decoding of Lithium Corporation's latest 10Q report. So what's the bottom line here, Tib? It appears that Lithium Corp is basically burning cash. It does not generate any revenue and needs to find a way to either generate money or stop the bleeding. The auditor sees a risk that the company might not be able to continue, and the company is overly reliant on related parties. They need to find a way to either generate money or stop the bleeding. The auditor sees a risk that the company might not be able to continue, and the company is overly reliant on related parties. They need to find a way to either generate money or stop the bleeding. The auditor sees a risk that the company might not be able to continue, and the company is overly reliant on related parties. They need to find a way to develop their properties and monetize these deals, which will not be easy. It will be a long road ahead. Cut. What's your take? Out the Discord in the description. Thanks for watching, and I will see you next time.